Hello, and thank you again for joining us here today with a new webinar in coordination with Orbex. And I would like first to introduce myself. My name is Nour Al-Hammoury. I was Chief Market Strategist at ADS Securities, and right now also I'm working with in coordination with Orbex to do some educational webinars, such as the one that we're doing right now, in addition to some videos and articles that are published on Orbex website. And today's, excuse me, that's too much. Let's save that. Well, I guess we don't need any sound. Yeah. So in today's webinar, we will be basically talking about or previewing the Reserve Bank of Australia decision, and what's the estimates, and what would be the impact or the scenarios on the Aussie, and what would be the scenarios that the bank might take in its next decision. In addition to that, it's going to be some sort of like a short webinar today, but I'm going to keep all of the questions until the end. If you have any general question about the Reserve Bank of Australia or other central banks or any other issues in the market, I'll be more than happy to discuss it with you guys. So beginning again with the Aussie, we will start with looking at the major outlook about what the market is thinking about it, and what the market's thinking about what the economists, let's say, thinking, and what's the general estimates. So beginning with just a little bit of boring writing, I might say, because I hate to write a lot on the screen, but we have to sometime. So at what time, basically, the timing of the RBA decision, or the Reserve Bank of Australia decision, is going to be at 3:30 a.m. GMT time, which is equivalent to, if you're living in anywhere in the GCC, or if you're living anywhere in the Middle East, it's going to be somewhere around 7:30 a.m. tomorrow, local time here in GCC, or here in Abu Dhabi. And the estimates for tomorrow's decision is quite unchanged. Everyone is thinking that the Reserve Bank of Australia will keep the rates unchanged at 1.5%, which is quite also, or considered as another low interest rate. Considered that also compared to other central banks, they're still also considered as a part of the Reserve Bank of Australia policy to stimulate the economy. But I believe that this decision will be influenced by many factors, which we will discuss it later on. For the time being, and going into the RBA statement, which is the most important in all of this, in all of the decision, and I would like here just to show you what's the meaning of the RBA statement and what to look for in it. So it's again like, what's the RBA statement, or what's the decision? It's again among the primary tools the RBA Reserve Bank board uses to communicate with investors, of course, such as you guys as a trader, or also the major investors around the world, with investors about monetary policy. It contains the outcome of their decision of the interest rate, of course, or even if they have any stimulus programs, any other announcements. It always includes, they always include it in their statement, and commentary about the economic conditions that, of course, influence their decision. But most importantly, it discusses the economic outlook and offers clues on the outcome of future decisions. Which means, again, we have to look into each central bank decision, and this is how I always look at the central bank's decisions. I put myself as one of the board members of the central bank, and what do we see whenever we see some sort of whenever we see any economic releases, whenever we see any news in the market, even also the market movement, whether we're talking about currencies or even whether we're talking about the stocks. In both cases, everything matters for the central banks. So going into the estimate a little bit again, there is something that I always look at also, which is the RBA probability curves, which is the estimates from all over the world, or the market estimate, if I may say, about their estimates for the for the interest rate. But this chart here, the probability, it shows you from 1 month all the way to 1 year what the market believes the Reserve Bank of Australia is going to do for almost 1 year forward. As for today, the estimates are quite stable at 150 unchanged, and 5 months from now, if you can see the curve here, where's the mouse? Yeah. If you can see the curve here, the curve is almost like going down almost a little bit all the way up, and then we're going down to almost 140, which is like just, we're talking about only 10 basis points. But there's still, the market believes at least that there is still a chance for a possible rate cut in almost 5 months time from now, which means until April of next year. But there's still high possibility or high probability for another rate cut. However, such estimates right now might be a little bit different if we look at it maybe a week before. But however, there still shows that there is a possibility for a rate cut. But right now we're going to look into some numbers which we believe at some point that the the Reserve Bank of Australia might come up with a surprise, or might surprise the market again with a possible rate cut, or maybe they might even hint for a possible rate hike in the future, which might come even in January's decision. Why am I saying that? Because the next slide will tell you exactly why I'm looking at what exactly I look at, and why do we think that there is a possible surprise by the Reserve Bank of Australia. The chart, or the table in front of you, I'm not sure if it's really clear to you whether there is. Can you read the numbers or no? If any of you, if you can tell me. I'm not sure if you can really read the numbers, but we're gonna go through it like chart by chart, not all of it, but a little bit of it. But whenever I look into like any of the central bank's decision, I have something called the economic tracker, which basically tracks all of the, or almost each and every single economy in the world, but the majors, the majors that I always look at. So first of all, we have, again, I start looking at the sectors, just like what the central bank does. They look at many of the sectors, the major sectors of the economy, including the health of consumer, the labor market, inflation, housing market, manufacturing sector, and the personal and household sector. Why do I look at these numbers? Because these kind of the numbers that the central banks also look at before taking any decisions, whether to cut the rates or even to raise the rates. And based on that, based on these numbers, I would put my strategy, put my estimates on what am I going to do, whether if the bank decided to cut the rate, or if the bank even decided to hold the rate unchanged, and if the bank decided also to raise the rates for any reason. Even I would put even some assumption about how would the bank tone would be if there is no change. So by looking at the chart, or by looking at the table, the table that you can see, I have something like here just to make it very kind of simple to you guys. But this chart basically shows all of the economic raises for Australia from the beginning of the year until today. This chart has been, well, I've just updated like just a few minutes ago, just to get all of the numbers. But we get all of the data from January until today, the available data, of course, because as you can see, November data is not ready, or it's not out yet. Also, we have the Q4 for inflation is not out, and some of October numbers also for the trade balance is not out yet. But those are the main numbers that I always look at, including the for all the sectors. So if you look at some, or beginning with the health of consumer sector, so retail sales and also retail sales year over year, we've seen some sort of growth in the past, at least for the past quarter, or for the past 3 months. Even for the year over year, we began the year at around 4.3%, but at the end of the year we had like 3.5. There is still some sort of a slight growth for at the end of this year, because at the beginning we had a little bit of a decline, and then we had a decline all the way to 3%, and then from there started to to recover a little bit, not that much, but so far. New motor vehicle sales and also the year-over-year both also had some sort of a bumpy ride throughout the year. If you look at the numbers, it's a little bit bumpy. The month-over-month is always bumpy, but also if you look at the year-over-year, we don't have that much growth, and it continues all the way down. So we began the year with 5.3%, and we continued to go down all the way back to 0.8 and even 1.2%. So this is considered also another slowing down. Consumer confidence index is always still very bumpy, but still kind of a positive. That's why this is what I say, whether there is a growth or no growth. So yes, looks like that we have some sort of a positive growth. So in general, we can say that the health of consumer is slightly positive. Consider that there is two numbers are not really great. Going into the labor market is very complex actually, and let me go and take you to the slide, the next slide, which is the labor market. Okay. First of all, I would like to talk about the unemployment rate, which is always very complex, and but this is what I always argue with many of the economists around, or the people that we work with, and also some of the journalists in TVs. So the unemployment rate in Australia has been declining for the past few months. We reached almost 5.5%. From the peak, of course, in 2014, we reached almost 6.35. However, if we look deep into the numbers, especially for the labor market in Australia, you will get a little bit of mixed views. Why and how? The next slide will give you more. Will give you more information. So this is the overall part-time jobs in Australia, which is very important to look at. That the part-time jobs in Australia are increasing very fast and in a very big even changes throughout the month. While the full-time jobs, so the part-time jobs right now, we're reaching about 3.8 million. During the whole year of 2016. At the beginning of 2016, we were around like 3.68, but now we are at 3.8 million, which is for Australia. This is way too much. Even though we're talking about like 300 to 400,000. But if we look at when you look at the part-time, why would you go? If I ask you guys a question, why would you go, or is it positive like to have a part-time jobs more than the full-time jobs? I'm not sure about that, because if the companies are hiring part-time workers, this means that the businesses the business sector cannot handle to hire full-time jobs as of yet. So increasing part-time jobs, why would you go also why would you go and work in two different companies for part-time jobs? Because even the wages are still lower. So one of the major things that I was looking at for the past few days, was the that's the part-time job. This is the absolute full-time job. Sorry for the confusion. Yeah, this is the full-time, not the part-time jobs. Okay, the full-time jobs last month we had the worst ever decline in the full-time jobs in Australia. So we had a huge increase in the part-time jobs, while the full-time jobs are declining. And last month Australia lost more than almost 80,000 jobs in 1 month. However, despite that, you might ask a question that, okay, since the unemployment rate is since the economy lost full-time jobs or whatever, they lost 70,000 jobs, why the unemployment rate is standing around 5.5%? Why we haven't seen any kind of an increase for the past month? Well, we've seen a very slight increase. However, but it's still, compared to the previous numbers, it is still very high. The answer of this question, and I'm always talking about it also, especially in the US, there is something called the participation rate, which you have to keep an eye on for the next few months, especially in the United States. Participation rate in all over the world. There's a lot of people leaving the labor force because they don't find enough jobs or they don't find the suitable jobs for them, which basically at some point in at the 6th week, it's different from a place to another, or it's different from the country to another. But let's say in the States, after 6th week, automatically you'll be out of the labor force because you haven't found any new job. This is why the unemployment rate would automatically go down. And this is what's happening abroad, everywhere, even in the U.S. And I'll try to give you some charts like in the next few minutes to show you. So again, Australia is still also better than other countries, but still we have a huge increase in the part-time jobs and a notable decline in the full-time jobs. We lost 80,000 last month, but the latest month we had 41,000 new jobs. But still, again, there's a challenge toward losing jobs more than even adding jobs. Okay, and now we're going to talk about a little bit about inflation. And I know that this part of the presentation might be a little bit boring before going into what's our plan for the Aussie or the Aussie pairs, but we'll get into it very soon. For the time being, looking at the inflation, and this is the core CPI, the year over year, which basically we're talking about the quarter over quarter. The Australia decided to announce their inflation forecast as per quarter over quarter instead of month over month because they think that it's more accurate, but we don't think that it's more accurate because you're talking about, or you're taking a huge numbers or a huge period, and you won't get even like any kind of clue until the end of the quarter. But if we look at the inflation, which is again the core CPI, the year over year core CPI, we had a notable decline at the end of 2015, and this is because again the decline in the global inflation led by the energy prices, But for the past 3 quarters, we've seen some sort of an increase, a little bit, not that much, but however, this is still 1.6%, while the Reserve Bank of Australia would like to see inflation above 2.3%, which is far away from here by around another 0.7%. Yet, this is still considered better than, let's say, in the Eurozone. The Eurozone, their inflation is about only 0.5%, while the bank target is more than 2%. So that's the inflation, or the core inflation, the year over year. But if we look again at the quarterly inflation, it is still also in some sort of a slowing down. If you look at the chart, it totally shows you how different and how it's also that's the CPI. That's not the core CPI. We're talking about the CPI, which also measures the whole inflation, including the energy sector, and including the most volatile product. Back in 2014, the inflation was around 3.2%. The bank was expecting the 2%, but we're still also below the 2%. We're talking about 1.3%. And for the past 2 quarters, we had some sort of a slowing down, but the Q3 had just a slight tick up all the way to 1.3%. Okay. One of the major things that I always look at also is business confidence, and one of the things why you need always to follow the businesses, and if you have the answer, you can also write it, and then we'll talk about it later. But businesses always have the most, maybe we can say the most accurate, and businesses always or the business sector as a whole, they always have that very early indications for any kind of change, whether if it's good or if it's bad, including what we call it the PMIs, or the Purchasing Managers Index. Why? Because any purchasing manager in any company would know whether there is a high demand on their products, because he needs to go and to buy raw materials and to give it to the company in order that they will produce. So if we saw the PMIs going down for the past few months, this would give you some sort of indication that slowing down is coming, and businesses would always react, or would always be the first one to react the first one to react to any market or any market reaction or any economic conditions. So this index basically is the businesses survey, which survey more than 3,000 businesses in purchasing managers in Australia. And the latest numbers basically shows, or as you can see on the charts, this is the survey comes at 6.2%, which is the lowest level since almost more than a year now. It's since Q2 of 2015. With this kind of a slowing down, and we had also, if you look at the chart here, we had like a drop, another 1, 2, 3. So we had like almost four months of consecutive declines, and this is what gave me some sort of expectation that this might be one of the reasons why the Reserve Bank of Australia might surprise the market today. But let's go into also the most important thing, that why I believe that the bank will surprise the market today is the housing market. The housing market in Australia for the past 3 months, so the most or the worst maybe decline, especially in the building approvals, which is very important. The building approvals in Australia declined by more than 25% over the past 3 months. The past month alone had only a decline of 14%. The month before we had almost 9%, and also the month before that we had 2% of a decline. So we had almost, like, we're talking about almost between 23 to 25% decline in the building approvals, which is basically why we believe that the bank, the Reserve Bank of Australia might come in and might step in, and they might announce something tonight or tomorrow, in the morning, by cutting the rates maybe by 25 basis points. There's still a possibility, or by even announcing any kind of measures that they will do in the future. That they might do in the future doesn't need to be like today or in this meeting. Another chart that is a little bit scary, which is the home loans, or the new home sales. The new home sales declined for almost like 2 months in a row, but at the same time we haven't seen 2 months in a row that we declined more than 8% since more than 2007 during the financial crisis. So this is also one of the early indications of the housing market. We had a 3 month of consecutive decline in 2016, and we saw the same thing was almost in 2014. And back then, whenever we saw 3 months of decline in the building approvals, the Reserve Bank of Australia also did cut the rate back then. So this is one of the things that I'll be watching again, or that will be one of the scenarios that I'll be looking for, that or why the Reserve Bank of Australia might cut the rates tomorrow. Again, this is the new home sales, as I said. So this is the most important charts that I'll be looking at for the next few hours. But let me take you also back a little bit toward the economic tracker, or our economic tracker. Yeah. So again, we went through all of the charts, but again, the labor market is still positive, but this is positive in terms of the part-time job, not the full-time job, which is more important. The unemployment rate is still going lower. Full-time jobs, as I said, it's not improving. It's still even losing more jobs for the past few months. And this is the participation rate that I told you about. So at the beginning of this year, the participation rate in Australia was 65.1, but we ended the year at 64.4, which is the lowest level of the year. And this is why the unemployment rate keeps going down. Inflation is not stable. We keep on losing even more. So right now we're at the lowest level of the year, Q3. That's the PPI. Sorry. The PPI, the year over year, we ended the year at almost 0.5%. The trimmed mean CPI 0.4, which is also the second lowest of the year. Even the year over year is still stable, no change. Quarter over quarter is also the same. So again, the inflation is not doing well. So if you look at the overall, we have 3 or 4 no's and 3 yeses, which is doesn't give us that much positivity. As for the housing market, as you can see the chart here, like most of the data are pointing to lower or slowing down, including home loans approvals, building approvals, the new private home sales, and even the new home sales. Most of the data are showing a slowing down. And now going to manufacturing sectors, business confidence, we're talking about the business conditions. They are also kept on declining. We haven't seen any sort of like a growth in the year. Also, the business conditions, we reached some sort of like the 12 point, but we were down again by 50%. So that's not something that we would like to see. Manufacturing index, services index, there was some sort of an improvement, but it's still not the one that we need. Also, don't forget that the construction index in Australia is still shrinking, which is the PMI. And also the positive came in, or the positive data came in from the new orders or even the exports, which is relevant because again the Aussie is also lost a lot of its value over the past few months. Finally, we're talking about trade balance deficit, which of course it had some sort of a very good shrinking for the past few months. We started the year about 33.40, and now we're talking about minus 12.27 only, and this is because of rising export and also lower import, which is still good for them. Non-farm productivity is still also on the downside. So whenever I look at these figures, it still gives me some sort of a possibility that the Federal Reserve might come in and might step in and not the Federal Reserve, sorry, the Reserve Bank of Australia might step in and cut the rates, or even might promise the world that we might move in the next few months. And this might be a very high probability because, and now we're going to go into the outlook for the Aussie. But why? There is something very important that you have to know. On the 14th of December of this month, next week, the Federal Reserve will announce its decision, and this is a very important decision for the Federal Reserve because, number one, this is the last Federal Reserve meeting. The Fed has promised the market to raise rates over the past few years, or the past, let's say, year, more than 4 times in a row. However, nothing happened at least since the beginning of the year. They said that we will be able to raise rates more than 4 times this year, but so far we're in December, we haven't seen any rate hike. That's number one. Number two, it's after the U.S. elections, which led Mr. Donald Trump to take over the White House, which should be watched also very carefully, as this might be an influence on the Federal Reserve decision in this meeting, because Mr. Donald Trump said many times that he will fire Janet Yellen. So I believe that this might be one of the reasons why the RBA might stay on hold. Okay, now what are we going to do in terms of the Aussie, or in terms of the scenarios that we are looking for? So let me change into the technical chart here. Hold on 1 second. Sorry. Okay. I'm going to change into the chart. Let me know once you see it. Hold on a sec. Okay. That's it. No, sorry, hold on. Okay. Okay. Can you see the chart now? Okay, fine. Okay. And I guess that you guys can see the pointer as well. Okay, that's fine. So Looking at the Aussie for the past few months, which is very important. For the past few months, the Aussie was on some sort of an uptrend. However, for the past few weeks, we broke below that support. From the previous months, what is the primary focus of the RBA based on their statement, inflation, employment, and others? It's all of it together. They don't, they don't concentrate only on few things. They always, there's a question from one of the attendees here is that from the previous months, what is the primary focus of the RBA based on their statement, inflation, or employment, or others? They focus on everything. If you read the statement, you will understand exactly what they look for, what they're talking about exactly. But this is a very important question. They look at everything. They even look at the global markets. They look even at what the other central banks have done, if they've done anything. So they always look at everything. They don't leave any glitch, if you might say. Okay, going back into the Aussie. The Aussie again, we broke below that's the daily chart. So we broke below the uptrend, maybe we can say for this year. And if we look also at on a bigger view a little bit, so we had the 0.7750s, that was the peak, and then since then we had almost all the way down to 0.73, and now we're 74. Why am I looking at this number at this chart exactly? Because I would like to see the RSI above the 50, in order to say that okay, this might be a very good chance to start buying again, or start like pushing with the pair. However, I don't think that will be a very good idea for the time being. Why? Because one of the things that I use is the 50-day moving average, the 100-day moving average, and the 200-day moving average. This is on the daily chart, and whenever I look at these moving averages, whenever there is a cross below, whenever there is a cross in the 50-day moving average below the 100-day moving average, it's always gives me some sort of a negative signal on at least on the short term, not only on the medium term, also on the short term. Moreover, we had a break below the 50 and then all the way back up in here. So I would still be interested to short the Aussie more than to buy it, especially right now that the US dollar index is trading around the 100 and it's still positive, and everyone is buying dollars because based on the assumptions that the Federal Reserve will raise rates at some point this year, or which basically in December, or the next upcoming, or the next meeting. So my plan would be, we're talking about from a technical point of view right now, we're not talking about fundamental. We're talking about the technical point of view here. But for the time being, I would be interested to short, not to buy. But where to short, that will be our next level. First of all, I would be interested to start shorting about these levels, which is, we're talking about 47.97. We're talking about 0.75, which is also called a psychological resistance. Why? Because again, we have broken the trend line, and we're also trended all the way lower. We're trading below the moving averages. We are below the moving average, and also the 50-day moving average has crossed below the 100-day moving average. Number two, the technical indicators are not pointing that much higher. We're still below the 50%, and moreover, we had the stochastic indicator is almost like near the overbought area on the daily chart. Therefore, I would be still interested to short more. Okay, so the levels that again I would be interested, as I said, the first one, sorry, that's the Fibonacci. The first one, which is the 38.2%, and that's why basically we had another decline all the way from here. One of the things that we might see, or the assumptions that we might put, if the central bank decided to keep the rates on hold with no tone and with very balanced tone, the next level for Aussie would be 75.43, which is the 50% retracement from the latest decline. And at the same time, you have to consider that there is a very huge resistance area at the moving average, which is 75.27. This would be another area to start shorting the Aussie again, between the 50%. the maximum that I'll be looking for, if again this is if the central bank decided to keep the rates on hold with a very balanced tone, I would be interested to start shorting again at 0.7599 or 76, which represents the 61.8% Fibonacci retracement. Your stop loss should be below the latest peak, which would be a little bit high, but however, if you are a trader in the market, you should be, or you should know that you need to be able to handle any kind of reversal. 0.77, I would put my stop around 78, 78, and 10. Okay, on the downside view, the first level that I'll be interested to look at, let's take out all of these. Yeah, this one is done, this one is done. Okay, on the downside view, the first thing that you need to look at, and if you also put another Fibonacci retracement, even on the daily chart, if you look at, this was the 60% Fibonacci, so that's why we had this kind of a bounce in the past few days. This was, I guess, Friday. Today is Monday. This was Thursday, and this is Friday, and this is Monday. And again, the 61.8 Fibonacci is a very important level to look at whenever you want to short or whenever you want to buy. But as I said, since there is a 61% Fibonacci right now, as long as we're staying below that level, we're still thinking that there will be a chance to short. As I said, we're at the top of these old levels that we're here. But on the downside view, I will be interested to revisit. The first one is 73.83. This is again if the central bank kept the policy unchanged with a very balanced tone. However, if the central bank comes in with a surprise to cut the interest rate again by 25 basis points or whatever, I believe that the first level will be 73.83, followed by 73.33, and the 25 basis point cut, the 25 basis point rate cut would be enough, or would be the catalyst to break last month lows, which is 15th of November, last month lows, which is around the 73.17, and we might be even able to see another downside or another leg lower. And to where, before that, we have to put the Fibonacci levels, and actually this was the 50% too, so you had two things to look at. This was the 50% as well. Okay, to where I would suggest, or I would expect somewhere around 72.08. So this is, or especially this is, we're talking here that if the bank decided to cut the rates directly, I guess that the level that we'll begin seeing is around 72 in the next few days. But again, as I said, you have to read the statement, make sure that you understand it, and make sure that the bank, or that you got all the information that you needed before entering your trade. So I gave you your the numbers, I gave you the levels, I gave you what we think that's going to happen. At the end of the day, you have to look into the numbers, you have to do your own analysis, and you have to do your own research before taking any decisions. And this is for the materials that we basically said here throughout the day. It's going to be for information only, and educational and informational only, not to be taken as an advice. And there's another question from one of the gentlemen here. Is this recorded? Yes, it is recorded and will be uploaded as soon as possible on Orbex YouTube. Okay, so this is it for me for tonight, for today, sorry, and I would thank you all for coming, and I'm sorry also that the announcement of the webinar came in a little bit in a rush. It was very late to send out the invitations, but this is again one of the webinars that we will keep on doing in the next few months. Thank you for coming.